Hello, I just typed in the chat box there. Can everyone see the screen okay and hear me okay? I just want to ensure that everything is working a-okay just before I look to begin the webinar. So for any of those who've just joined in the last minute or two, I will be kicking off the webinar in the next 30, 40 seconds. I just want to ensure that everyone who's logged in can see me and hear me okay. I can also see the screen okay. What you should see at the top left-hand corner is the FX Pesa logo. The screen is dark. The screen is meant to be dark, but can you see the FX Pesa logo up the top left? And also, yes, it's available. Great. Sound is good. Excellent. This is what I want to be reading. Screen not yet. Can you not see the screen not yet? Can everyone see the screen? Screen is blank. What you should be able to see is up the very top left, the FX Pesa logo, and then also the trading in margin product carries a high level of risk. I haven't actually shown the charts just yet. I'm just showing the risk warning of the FX Pesa logo. Yes, the logo is visible. Excellent. Thank you for that. So I'll look to kick things off now. So my name is David Madden. I work as a market analyst for Equity Capital, and Equity Capital is one of the many companies that fits inside the overall equity group. And of course, another one, as you well know, is FX Pesa in Kenya. Now, before we get into the actual webinar itself, just want to highlight the fact risk warnings. Trading in margin products carries a high level of risk. And you should be able to see the white screen now. It says it's the exact same setup, the FX Pesa logo up the top left, and also once again on the bottom right, it says trading in margin products carries a high level of risk. So that brings the risk warning component of the webinar to an end. So what we'll do is we'll kick off now with Eurodollar. The big news of the day: the European Central Bank hiked interest rates by 75 basis points, meeting expectations. In addition to that, the European Central Bank lifted its 2022 CPI forecast to 8.1% and its 2023 CPI forecast to 5.5%. On top of that, when it comes to growth, things are a little more mixed. The European Central Bank actually nudged up its growth forecast for this year, but it slashed the growth forecast for next year in 2023, and also trimmed its growth forecast for 2024. So the European Central Bank have made it clear that further rate hikes are in the pipeline, and interest rate hikes often take several months to come into play anyway. So things aren't looking too great for the Eurozone, whereby we're going to see further rate hikes down the line. At the same time, next year, we're going to have a sharp drop off in growth. We also heard from Jerome Powell today, the head of the Federal Reserve. Mr. Powell basically said he's very keen to keep hiking up interest rates, and he will kind of keep hiking up on interest rates until the job gets done. So it's a very kind of clear message from Mr. Powell that the Federal Reserve are going to continue down the route of tightening monetary policy. Looking here at Eurodollar, we can see the longer term trend for the Eurodollar is to the downside. What's been going on, as I mentioned, we had hawkish comments from Mr. Powell today. The ECB hiked rates by 75 basis points, but there's also concerns about energy supplies into mainland Europe. Germany and Italy, most notably, are very heavily dependent on natural gas from Russia. How is that going to fare out in terms of supply levels in the weeks and months ahead, especially as winter is on the horizon? Looking at the price action here, the currency pair Eurodollar, it fell to a 20-year low only in the last couple of days, which really highlights how bearish the much longer-term downward trend is. We have seen a bit of a bounce back in the past 24 to 48 hours, but Eurodollar is off its recent peak. It's holding below these two simple moving averages. Just to let you know, the moving averages I have on screen are a 20-period moving average, a 50-period moving average, and a 100-period moving average. And just to let you know, I'm looking at a 4-hour chart. So we're trading below these two simple moving averages. While we continue to hold below these two simple moving averages, I suspect the longer term, more bearish trend will continue. Actually, I made a mistake there, everyone. It was I had the order the other way around. This moving average here is a 20 period. This one is a 50 period, and this one is the 100 period moving average. So apologies for that. 20, 50, 100. Although euro dollar has rebounded, it's off its recent peak. It's trading below these two simple moving averages, and while it continues to hold below these two simple moving averages, it's likely the longer term bearish trend will continue. A move lower from here could see a retest 0.9930 and drop below that could see it back down towards 0.9882. Now, even though the short-term trend for the currency pair is lower, it's worth noting the more medium-term trend for the currency pair is higher. So if we do see a rally in euro dollar from here, where can we target? If we break above the peaks of today, we could then be looking up towards 1.0078, and a break beyond that could see us up towards 1.0098. If we're to go beyond that, the next big level to watch out for will be the highs of the last peak here in mid-August, where the market turned lower at 1.0171. So I know some of you, I can recognize some of the names, have regularly tuned into my webinars. The basic structure is I'll run through a handful of the kind of big popular markets, talk about what's going on from a fundamental analysis point of view, news, and also from a technical analysis point of view, charting. And if you have any questions about what I'm covering then and there, feel free to just kind of stop me and say, David, I didn't understand that, and please explain again. Also, if there are any markets that I haven't looked at and you want me to look at, feel free to just type in the chat box, say, would you please look at gold or silver or whatever it might be. I'm more than happy to take a look and give you my thoughts and my opinions on the market. That was euro dollar covered. Now let's take a look at what's going on with the other big market in Europe, the DAX. So what's been going on? There are a lot of kind of crossover news between what's going on with the DAX and also euro dollar. So energy security worries. Will Germany, the largest economy in the Eurozone, have enough energy to kind of see itself through the next few months ahead? Interest rates were hiked by 75 basis points in by the European Central Bank, meeting expectations. Further rate hikes are on the horizon, and also other issues hanging over the German economy, but also what's also hanging over the German economy. It's hanging over the German economy, but also the wider European economy, and to a lesser extent, the world economy. Worries about high levels of inflation, worries about higher interest rates, worries about high consumer price index, CPI, and worries about high PPI, producer price index. Producer price index, for those of you that don't know, is the measure of costs incurred by manufacturers. And think about it, if costs are rising for manufacturers, factories and whatnot, chances are they're probably going to rise for the end consumer, because if you're a manufacturer and your materials and your utility bills and your wages are going up and your insurance costs are going up, you've got two choices. You can either pass it on to the consumer in terms of what you sell it for, or else you can absorb that into the profit margins and therefore make less profit on the goods sold. So if the PPI is rising, that typically informs us that CPI is going to remain high as well. So these are all the issues that are hanging over the German stock market. As we can see here, it's been in a fairly clear downward trend recently. As we can see here, it's been moving lower recently. Looking at the recent price action, in the very short term, it's been moving lower here, below all three of these simple moving averages. While we continue to hold below these three simple moving averages, likely the broader bearish trend will continue. A move lower from here could see retest recent lows of 12,686, and a break below that could see us back down towards 12,595. Now, even though the short-term trend for the DAX is lower, it's worth noting the more medium-term trend for the DAX is higher. So let's take a look at this line here. The more medium-term trend is higher. And even though we saw a sharp sell-off today, the low that we saw here wasn't too far away from the low that was that was witnessed here, and we are off the lows of the session. Perhaps the DE30 is looking to form a base in around this zone here. Maybe it is, maybe it isn't, but we have to consider as a possibility. If the DE30 can manage to hold above the recent lows here at 12,686, that could be an early indication that the more medium-term upward trend is still in effect. If we do see a rally from here, where could we target? Well, I've been looking up towards the most recent peak of 30,041. I think going beyond that, I've been looking up towards the peak here of late-ish August in at 30,156. Coming on to gold now. So gold, like many other markets, has seen a lot of volatility recently. There's a few things that are influencing the price of gold. One of the most important factors influencing gold is the US dollar. So I know some people out there, they will only focus on or look at the markets that they want to trade, and some people out there never really look beyond the markets that they trade themselves, which I consider to be a fairly big oversight, seeing as the markets are all interconnected. And for anyone out there that trades gold, it really is worth your while keeping an eye on, first of all, the US dollar. Recently, there's been a strong inverse relationship between the US dollar and gold. And secondly, I'll be looking out for what's going on with global stock markets. There can often be an inverse relationship between gold and stock markets as well, whereby if stock markets are falling and traders are fearful for the health of the global economy, we can see a rise in gold. And conversely, if you ever see stock markets booming and people are willing to take on more risk and they're very optimistic about the future, you can then typically see gold underperform. So for any gold traders out there, keep an eye on the dollar, keep an eye on the broad sentiment into global stock markets. Even if you don't trade the dollar or stock markets, just keep an eye on what they're doing. Also, what's worth keeping an eye on is bond yields. Bond yields are on the rise because central banks are hiking interest rates and they're giving off the impression they're going to do more interest rate hikes. So when bond yields are rising, people who want an asset that's considered to be low risk, rather than having their money tied up in gold, they might have their money tied up in a government bond because the yield, the return is rising. The yield on the US 10-year government bond yield is now around 3.3%. So you get a return. You don't get a cash payout or interest payment from gold. You don't get a dividend from gold. Whereas if you have your money in a government bond, you get a coupon, which is an interest payment. If you have your money sitting in a bank account, you get an interest payment. So when bond yields rise, that can also put a bit of pressure on gold. So these are the factors influencing gold. As I mentioned, we had a hawkish commentary from Jerome Powell today, hence why we have a strong US dollar. So we saw a lot of volatility in gold. It spiked higher here. Went up to a level last seen about a week ago or 10 days ago, but it's moving lower again. The short-term trend for gold is lower. We're below all three simple moving averages. The much longer-term trend for gold is lower. Looking at the RSI, the relative strength index, which is essentially like an elastic band, is which way the market moving. Is it going to be stretched in one direction or another? The RSI is moving a bit lower, indicating the price bias is to the downside. Looking at the MACD indicator, which measures momentum, momentum is in positive territory, which suggests the bulls are in control, but we can see a decline in positive momentum, implying they're no longer as influential, the buyers, that is, the bulls, as they once were. So between the price moving lower and the dip in positive momentum and the fall of the RSI, that can add to the overall kind of bearish sentiment of gold. So if gold continues to move lower from here, I'll be looking at looking towards just below 1700 in at 1696, and then below that I'll be looking down towards 1688, the recent lows that were set. And then if you go below that, we then be looking at heading down towards kind of 1680, 1670. Now, even though the short-term trend for gold is lower, it's worth kind of pointing out the more medium-term trend for gold is sort of higher. It's not really, but it's sort of higher. It is worth pointing out Today's peak here cleared this peak, and it's worth pointing out the low that we saw here today was still comfortably above the low that was set in early September. So if the more medium-term upward trend continues, if we see kind of price action kind of like this, like a channel, a slightly kind of rising channel, where could gold go? Gold could head up toward this area here at 1732, and then beyond that up towards 1745. So as I mentioned a few minutes ago, if there are any markets that you want me to take a look at, feel free to type in the chat box, say, oh, David, please take a look at this. I'm more than happy to discuss other markets. Coming on now to US oil, WTI. This has seen a lot of volatility today. Early this morning, WTI fell to a new 8-month low. A few hours ago, it traded back at a level last seen in January. Why is this? Well, there are concerns about global demand worries. Yesterday, China posted fairly disappointing trade numbers. Chinese exports and Chinese imports showed they're still growing, but they're growing at a much slower rate. In fact, I think Chinese imports grew by 0.3%, so they barely grew, and there was a large drop-off in growth compared with the previous report. Both the imports and the exports reports came in well below expectations. I think about this: if China's exports are falling China's exports are growing at a much slower rate, then global demand is probably falling, because after all, China is the manufacturing shop of the world. So if China is selling fewer and fewer goods, that's probably a product of the fact that people around the world are buying fewer goods. So there's concerns about global demand, hence why we're seeing a downward move in oil, hence why only a few hours ago, WTI US oil fell to its lowest levels in January. We have seen a bit of a rebound, but we can't really ignore that the longer term trend for oil is lower. Look at the price action. Although we've rebounded a bit, we're still holding below all three simple moving averages, and while we continue to hold below all three simple moving averages, it's likely the longer term downward trend will continue. A move lower from here could see it retest 80, spot 93, and a break below that could see it back down towards $80. That's like the next big number to watch out for. On the other side of the coin, we can't ignore the fact that we've had a very bullish move here. In fact, this candle here has the possibility of being a bullish engulfing. And for those of you who don't spend a lot of time reading up on technical analysis, what a bullish engulfing is, it can often be, if a price action turns out to be bullish engulfing, it could be a sign the market is going to reverse. It could just be a case of the market reverses for a bit and pulls back some of the ground recently lost. Say for example, moves up to around 85 or 86 and then moves lower again. Or it could be a case of the market reverses and it completely turns around and it's a massive rally beyond 85, beyond 86, back up towards 90 or beyond 90. So it needs to be dependent on what happens next. But essentially, bullish engulfing is where this, notice how the body of this candle here completely engulfs this candle here. So there's clearly a lot of buying sentiment if the market can completely just turn around in that time frame. The 4-hour time frame here is very, very bullish, just like saying how the 4-hour time frame this period here is very, very bearish in this red rectangle here. This red rectangle completely engulfed or overshadowed this positive candle here. Conversely, this positive candle here completely engulfed or overshadowed this red candle here, this red rectangle seen here. Looking at the back of the indicator, momentum is in negative territory, but negative momentum is in decline. So the bears are no longer as influential as they once were. Looking at the RSI, we can see that it got close to being in oversold territory, but didn't actually quite get there, and a bit of a rebound off that level. So in the near term, we could see a rally, and if we do see a rally in US oil from here, first and foremost, I'll be looking up towards this simple moving average here, the 50-period moving average. Sorry, apologies, the 20-period moving average here, which comes into play in around 84 spot 75. And the reason why I'm looking up towards that is because if you follow it around, you can see the 20-period moving average ran into resistance here, and also ran into resistance here, and it ran into resistance here. So there have been numerous occasions where the 20-period moving average recently has acted as resistance in the last few weeks. And as I say, if a metric has been of importance in the past, it makes it more likely to be of importance in the future. Looking beyond that, if you do break beyond 84.75, I've then been looking towards these peaks here. There seems to be a cluster of peaks here in around the kind of 87.32 area. And then if you go beyond that, I'm looking up towards 89.22. Are there any markets you would like me to take a look at? So far, I've gone through euro dollar, I've gone through gold, I've talked about the DAX, I've also talked about US oil. Are there any other markets you want me to take a look at? We can take a quick look here at the price action of the US 500. So there's been a few things going on with the US 500. As I mentioned already, we've seen a fairly hawkish Jerome Powell today. Mr. Powell made it quite clear that the Federal Reserve are going to continue down the path of hiking interest rates, which isn't exactly a surprise. It was quite clearly marked out. We have seen relatively high bond yields in the United States. The last time I checked, the US 10-year yield is trading around, or maybe even below, 3.3%, but we have seen it at higher. We have seen it at a higher level this week. I think this week it got to around 3.35 or perhaps 3.36. Thereabouts. The recent peak, the recent high on the US 10-year yield was a few basis points higher than what we're currently at. And by the way, it was a 3-month high. So we're off the recent. Although bond yields are high, we're still off the recent peak, which is why I think the US 500 has rallied. So yields are high, but they're not as high as they were, and which is the equivalent of saying the US 500 is low. It's in a downward trend here, but it's off its recent lows. So if you trade the US 500 or any of the US stocks, I'll be very much looking for keeping an eye on what's going on with bond yields. Looking at the kind of the longer term trend is clearly in a fairly clear downward trend. It was only a few days ago we saw the US 500 fall to a level last seen in mid-July. So we're talking about 10-week, 11-week lows that were posted only a few days ago. We have rebounded somewhat. The question I'm asking myself is this rebound that we're currently seeing here just a bit of a relief rally before the market moves lower once again? Like how we saw an aggressive move lower here. The market rallied, then it gave up its gains. Market rallied, then it gave up its gains. The market rallied. Will it give up its gains, or will it continue to move higher and higher and higher? Looking at the price action here, we've had a pretty decent rebound in the past 24 to 36 hours. The peaks that we saw, in the last few hours were sort of in line with the peak that was set here. So the recent peak was 40.10, while the peak that was set here was 40.18. So we didn't retest this peak here. We're trading we're trading ever so slightly above these two simple moving averages. So in the very short term, we could see a continuation of this short-term upward move. The RSI is moving higher. The MACD indicator is firmly in positive territory, implying the bulls are in control. If we do see the US 500 continue to hold above these two simple moving averages, the 20 period and the 50 period, then we could see the short-term upward trend continue. Moving higher from here, if you break above today's peak at 40.10, and then be looking towards the recent peak of 40.18. If we break beyond that, that'll be fairly significant. And then going beyond that, I'm looking toward this zone here around 40.27, and the next big level beyond that will be up here at 40.70. That being said, about the short-term rally, we've discussed the possibility of the market continuing on this rally here and moving higher and higher and higher. Let's take a look at the other side of the coin, whereby the market's been in a fairly clear downward trend for several months now. So look at the price action here. This isn't by any stretch of the imagination a great trend line. It has 2 points on. Well, actually, you could say far from perfect. this trend line here, you can argue now has 3 points on it: the beginning, this point here, and this zone here. Even though the market actually went ever so slightly beyond it. If a trend line has 2 points, it's a tentative trend line. If the trend line has 3 points or more, it then becomes a confirmed trend line. So it is possible the market could go all the way up to this trend line here in the region of around 40.40, encounter resistance yet again for a second time, for a third time rather, and then look to move lower yet again. So it is possible there are always trends within trends. We could move higher in the near term, only to move lower again in the medium and longer term. So if we do move lower from here, where can we target? Well, I'll be looking down towards this moving average here, the 20-period moving average, which comes into play around 39.56. If you follow it around, it acted nicely as support here. It actually had resistance zone here, kind of acted resistance here. It acted as support here. We saw a bit of a consolidation zone here. And once again, as I said earlier on, if a metric has been of importance in the past, it makes it more likely to be of importance in the future, although there are no guarantees. So if we do sell off from here, support might be found at 39.56, and a break below that could see us back down towards 39.10. I got a question here about market breadth on the platform. The best thing to do about that is contact one of the individuals on the customer service team or on the sales team. They'll be in a better position to actually show you the kind of run through of the very different features that we have on our platform. I got another question here about what's your favorite bars? Just drag and drop. When you say bars, are you talking about the kind of the charting package that I'm using? Because what I'm currently using is a candlestick, which basically shows you the kind of the high open, low, and the close. So what I'm showing you right now in front of you, the candlesticks, also the very different colors can show you whether visually display whether a certain candle given its time period, whether it was an up candle or a down candle. Sorry, an upward move or a downward move. I'm just conscious of the fact now that I've been going on now for about 30 minutes. Once again, are there any markets you want me to take a look at? Because if not, I'll look to wrap things up. So feel free to just type away in the chat box, ask me any questions about what I've covered so far, or if there are any markets that I haven't covered that you want me to take a look at. Feel free to just type away, and I'll happily look at whatever markets you want me to look at. So once again, just putting there in the chat box, any markets you'd like me to cover, any suggestions. I'm more than happy to take suggestions about which markets to take a look at. Aussie Yen coming up. Aussie Yen. And also dollar yen. Interesting. So first things first. I'm currently looking at the chart of AUD USD, and the reason why I'm doing this is because I want to see what's going on with the Australian dollar. So as we can see here, AUD USD, Australian dollar versus the US dollar, is in a clear downward trend. So, but I know for a fact, pound dollar is trending lower, euro dollar is trending lower. There's a common theme here of a strong US dollar. So although Aussie dollar is falling, that could be just largely down to the fact that the US dollar is very, very strong. And that's what I'm trying to figure out. Is it weakness in the Australian dollar, or is it strength, or is it just off the strength in the US dollar? So take a look now at Aussie Yen. So this is a very different scenario. And I know that the yen is weak across the board because dollar yen, which will come on to a second, recently hit a 24-year high. So it's very, very strong. So a moment ago, we looked at Aussie dollar, and that was in a clear downward trend. And as I now suspect, largely because of the strength of the US dollar, Aussie yen is in a very, very strong upward trend. We can see here, I think we're probably back up to multi-year highs. We're back up to levels last seen on Aussie yen since 2014. So we're talking 8-year highs. As I mentioned a moment ago, dollar yen, which you know off the top of my head, is at a 24-year high. Aussie yen is at an 8-year high. There's a common theme here of weakness in the Japanese yen. Look at the price action of Aussie yen. We're in a strong upward trend. We recently hit an 8-year high. While we continue to hold, even though we pull back a bit, we're still comfortably above all 3 simple moving averages. While we continue to hold above all 3 simple moving averages, it's likely the more medium-term upward trend will continue. Moving higher from here, I would like up towards 98, 99, and then of course the big one, 100. Look at the price action in the past 24 hours or so. Market has pulled back ever so slightly. Look at the MACD indicator, momentum swung from positive territory to negative territory, implying the bears are now in control. Looking at the RSI, it was in overbought territory, then it fell out of overbought territory, and now we're kind of back on the cusp of overbought territory. If we do see, so if we do go back into overbought territory, that could be a bit of a warning sign that we're going to see another pullback. But let's face it, look at the price action in the last few weeks and months. Market rallies, pullback, market rallies, pullback, market rallies. Okay, had a very large pullback here, and the low that we saw here was well below the low that we saw here. But beyond that, market rallies as a pullback, market rallies as a pullback. We've broadly seen a series of higher highs and higher lows. So if we do see a pullback in Aussie yen, for some people anyways, that could provide a buying opportunity. Other people out there I know like to trade against the trend. So look at the price action now. If we were to kind of move lower from here, where would I be looking down towards? I'm looking towards the 20-period moving average. It acted nicely as support here. If you follow it around, there are several occasions, not perfectly, but a few occasions where it acted as support, and that comes into play in around 96.64. Go below that, and then be looking up towards this zone here. We can see the peak that was set here coincides with the support zone that was set here, and that's in around 96.00. So they're the areas that I'm watching out for on Aussie yen. Sorry, yes, on Aussie yen. Got a question here about dollar yen, which keep in mind the price action that we're just seeing here on Aussie yen. Keep that in mind while we now take a look at dollar yen. The price action is very, very same. I'll flick between the two again. Once again, the common theme is a very, very weak Japanese yen. And the reason why I'm talking about this is one of the aspects of technical analysis that I like is Dow theory. And Dow theory, one of the tenets of that school of thought is that the averages must confirm each other. And what that means is markets that are similar should in theory be moving in the same direction at the same time by roughly the same amount. So if you're trading Aussie yen and you see the markets in a strong upward trend and Aussie yen's hitting an 8-year high, and you take a look out of interest, oh, I wonder how Aussie yen is going to continue to go up. What are other yen crosses doing? Dollar yen at a 24-year high, euro yen at a high, CAD yen at a high. You can then develop a clear picture that all these currency pairs against the Japanese yen are hitting multi-year highs. Why? Because the yen is weak. And conversely, what you should also be doing if you're trading Aussie yen is taking a look at how the Australian dollar is faring against the US dollar, the Canadian dollar, the New Zealand dollar, the Swiss franc, the euro, and get a horrible idea of what's the overall strength of the Aussie. And that's what I would always do when I'm looking at trading at a currency pair. You can't, I don't think it's a good idea to look at a currency pair in isolation. You need to look at what is that currency doing against a host of other currencies for both currencies, for each currency. Dollar yen yesterday hit a 24-year high, so it really speaks to how bullish the recent upward move has been. We've had a bit of a pullback, but guess what? We're still well above the 20-period moving average. While we hold above all 3 simple moving averages, it's likely the more medium-term upward trend will continue. A rally from here could see it retest the recent high, and then go beyond that. I'll be looking towards 145, 146, and then further on the distance, the next really big level to watch out for will of course be 150. On the downside, where can we target? Well, I'm looking toward this zone here, bit of a consolidation zone here in around the kind of 142.70 area, and then beyond that, I'm looking down towards looking down towards the 50-period moving average. And at 141.22. If you follow it around, it acted nicely as support here. Didn't quite act as support, but got quite close to it, and also acted as a resistance point here and a support zone here. So on several occasions, the 50-period moving average has acted very nicely as a support area, support and/or resistance on dollar yen. So once again, if a metric has been of importance in the past, it makes it more likely to be of importance in the future. I've got a question here about the UT 100, the NASDAQ 100. I'll take a look at that and then I'll look to wrap things up. Oh, turns out I already have it lined up. So the UT 100. Get rid of the lines that are previously drew here. So the UT 100, as we can see here, is in a fairly clear and obvious downward trend. It was only a few days ago, we fell back to a level last seen, I believe in July, was it mid-July? Yep, back to a level last seen in mid-July. So talk about an 10-week low being set on the UT 100. So the longer term trend is very much bearish on the UT 100. Look at this. It's not a perfect trend line, but if you draw that, the longer term trend for the UT 100 is lower. We recently had an 8-10-week, recently an 10-week low, 10-week low. That really kind of speaks to how bearish the recent downward trend has been. Although we have rebounded, if you take a look at the big picture, the longer term trend to the downside, if we kind of fail to break above, let's say, for example, this zone here, this peak here, kind of in around 12,500 thereabouts. If you had to kind of break above this peak here, that could be kind of an early indication that the longer term bearish trend will continue. Moving lower from here, I'm looking down towards this low here, and just north of 12,025, and a break below that could see us back down towards 11,920, the recent multi-week low that was set here. And then of course, if you go below that, we could be looking down towards 11,800, and at that point we'd be in fresh multi-month low territory. On the flip side, the very shorter term trend, the market's been moving higher, the RSI is moving higher. I got a question about which indicator to use. I'm currently using the RSI, the Relative Strength Index. It sort of like measures kind of almost like an elastic band, which how quickly is the market moving in a certain direction? Because as you can imagine, if you stretch an elastic band long enough, it becomes quite stretchy, and then a point where it might just kind of snap. And that's kind of like what the RSI is. If the market moves quickly in a certain direction, that could be a forewarning that the market is going to move quickly in the opposite direction. So if the market ever moves into oversold territory like we saw here, that preceded this sharp rebound that we saw here. And conversely, if the market ever moves into overbought territory up here, that preceded this downward move here. Like anything, indicators, nothing works all the time, but everything works some of the time. I also like to look at the MACD indicator, which measures momentum. So if you can imagine a marathon runner, they're continuing to kind of run mile by mile by mile. By kind of when they're on a kind of mile 10 to 15, they're probably at quite a decent pace. But perhaps by the time they're on mile 21, 22, 23, they're still making progress. They're still moving forward. They're just doing it perhaps at a slower pace. They're possibly cooling down, and that's what kind of momentum kind of measure. So we can see here that when the market was driving higher here, we saw a steady increase in positive momentum. The momentum, the big moves were with the buyers. But now we're seeing the market plateau, top out, and we're also seeing, if anything, a slight decrease in positive momentum. So the market's still moving forward, it's just doing it at a slower pace. And when positive momentum is tapering, that could be an early sign that the buyers are kind of losing a bit of confidence, they're running out of steam, they're running out of energy, and that could be a forewarning for the market moving lower. It might be, it might not be, but it could be. And that's what I look at. So look at this price action here. The market's moving higher. The peaks that we saw here didn't retest this peak. It didn't retest this peak. It didn't even get close to retesting this peak. So the longer term downward trend is still in effect. We can already see that positive momentum is fading ever so slightly. So perhaps the bulls and the buyers are not as influential as they once were. If we do see a bit of a pullback, so that could be a sign the market's going to fall. On the other side, we're still holding above these two simple moving averages, the 20-period moving average and the 50-period moving average. And while we continue to hold above these two simple moving averages, it's likely that the short-term upward trend will continue. Moving higher from here, I'll be looking up toward this zone here, this peak here around 12,420, 416, and then beyond that, I'm looking toward this peak here around 12,647. The reason why I put a trend line here is because if you look at the kind of broader price action, there was sort of a consolidation zone here. Not broadly speaking, it's very, very loose. The market peaked here in late July. The market, when it pulled back, it's sort of at a consolidation zone here. When the market had an aggressive sell-off, it kind of bottomed out just below the trend line. It acted very nicely as resistance here. When the market rallied, it kind of shied away from this zone here. But also, look at the trend line. It intersects with this trend line. The trend line whereby the market was at its peak here. It had encountered resistance here and it moved lower. So it's quite possible the market, both trends can coexist. The short term, the market, it's possible the market continue to rally in the short term, encounter resistance here around 12,500, and then resume the longer term downward trend. Everyone at different time frames. So some people are looking at, a 5-minute chart, 1 hour, 4, 2 hour, 4 hour, and looking where's the market going to be in a matter of minutes or a matter of hours. Other people are looking at the bigger picture. So it's possible both can coexist. This short-term trend could feed into the beginning of the continuation of the longer-term trend, if that all makes sense. So I've got a question here about the indicators. Any last call for anything that I commented on there in terms of the indicators? Any questions about the indicators that I covered, or do you see what I mean about how there can be short-term and longer-term trends going on at the same time? If there are no more questions or comments, I'll look to wrap things up there. So as always, thank you very much for those who stayed on right to the very end. Special shout out and a thank you for those individuals who asked a few questions. It's always much more fun for myself whenever people actually ask me a few questions. Got a comment here. I want to shout out for anyone who's asked any kind of questions or comments. It's always a bit more fun for myself whenever whenever I get asked a few questions. Sometimes there are markets that I haven't looked at in a while. For anyone out there who wants to contact me, feel free to contact me on Twitter. My handle is @dmadden_equity. That's EQUITI. If you also look at the FXPesa Twitter feed, you'll also see there's been times where I've been retweeted by FXPesa, or I've tweeted at the FXPesa handle as well. You should also be able to find my contact details also on the FXPesa Twitter account as well. So I'll look to wrap things up there. So everyone, thank you very much. Have a good evening, and I'll speak to you next week. Thank you very much.